Okay, guys, can you hear my voice? We're not getting started till 9. I just want to make sure that you guys can hear me loud and clear. Please use the chat function to ask questions. So we're going to be actively monitoring that as we go. Okay, cool. Now, guys, I decided I wanted to hop on. This is Kevin, by the way. I wanted to hop on this a little bit early. I know some of you had been on the VC today for the trade, had some questions. I just wanted to open this up about 10 minutes early before we start the training. Is there anything on the top of your minds that's really pressing that you'd like to get answered regarding futures, trading? You know, you can ask me about gamma exposure. You know, it's if we're going to do that just a few minutes beforehand. Obviously, we're focusing on futures, but I'll kind of field any questions you may have.
It's your chance to get one-on-one with Kevin.
Well, a lot of folks have questions today in VC, and so I'm sure more pop up as we go, and I get a lot of folks sending DMs. So if you have a question, chances are somebody else does as well.
All right, the first question is explaining gamma.
So gamma itself is one of the Greeks, but it has to do with the rate of change of delta. Delta is how much a stock option will move up per dollar. The use for us is we use TraderLink. Okay, TraderLink is what we use here. It's an amazing tool that Mitchell and his colleagues have created, but that is giving you as close as we can to real-time data to see what the entire market, as far as market makers and dealers who are the primary sellers and buyers of, especially the sellers, excuse me, of options for SPX. What this does is it allows us to have a broad view of their exposures, whether it be calls, calls and puts that they bought or sold. But it gives us a glimpse in where price will want to go, specifically if they have big interest open in it. Now, I would tell you this, TraderLink has a lot of great trainings on it. So I don't want to get bogged down in actually what it is. But I will tell you it's one of the main components that I use to trade. Let's see here. Okay, how do I find entries?
Yeah, that could be a really long topic, but we'll definitely cover that.
That's a really long
session.
topic. That's a really long topic. Okay. One thing I can tell you is how to proper size. That I can't answer you right now. Okay. At least how I do it. It depends on the size of the prop firm I use, the size of the account. Okay. If I'm using a small account to where the drawdown is only like 2,000, I'm going to do something like a 2ES position. If I'm doing an Apex 250,000 with a 6,500 drawdown, my position size is probably going to be in the neighborhood of 3 to 4 ES. It simply matters, or excuse me, it depends on how big of a drawdown on an account you're using. I don't want one trade to blow the account. Okay, that's the whole idea.
And as for me, I actually. Oh, sorry, go ahead, Kevin.
No, please go ahead. Please, everybody does it differently. Go ahead, you all, please.
Yeah, as for me, I actually approach it a little bit differently. I go by how much money am I willing to lose. But I mean, the second session, which is next week, I know that's one of the questions that someone asked. But my methodology is based on how much money am I willing to lose, because I have a different style of trading. But I mean, everyone does it differently. It really depends on what style works best for you.
Yes. Well, position size also factors into that, because when you have stops in place, those stops may be 10 points, 5 points, 4 points. And so your position size can in fact be bigger or smaller depending on what size of stop you're going to put in. So for example, if you have a 10-point stop and you may have 2 contracts of ES, on one trade. But if you have, let's say, a 5-point stop, you can have, 3 or 4 contracts, a bigger size. And the reason is because if you say I'm only going to lose 1,000 on this trade or 2,000 on this trade, that type of measurement, you can adjust your position size based on the stop loss, if that makes sense, guys, and the profit target. But I don't personally like risk reward. I like you said, a flat dollar amount I'm willing to risk on a specific trade. Is that what you do, Eula, yourself?
I do, but I mainly use it based off of levels too. So first I dictate exactly how much money I'm willing to lose, whether it was like 500 or 1,000. Then from there, then I dictate exactly what's my sizing gonna be. So if I'm closer
Yep.
to the support level or my entry level, then maybe I'm gonna size a little bit heavier, but
Yep.
I'm still gonna have that risk management where I'm just gonna lose whatever amount I decide, whether it's 500 or 1,000, based on
That's right.
where I enter.
That's exactly right. Because if your stop loss is tighter, you can afford to have a bigger position because you're going to have the same amount lost, approximately. Is that correct in your method?
Yeah.
Okay, cool. Yeah.
I think Iraqi would ask, have you ever used ATR or keep it in your chart?
Yeah, ATR, average true range. For those who aren't familiar with ATR, yes, I use it periodically. It will give me an idea of how much the market is moving. What ATR, guys, is it takes a set amount of periods. A lot of times the setting is automatically 14. It will take the set amount of periods from high to low each day and then average it out as far as the range of the market. So, for example, SPX, if you were to take the previous 14 days, you're going to see that the market ranges maybe 25 points one day, 50 another, 130 like today, 60 on another. They're going to add up the last 14 periods and average it into a number. That's the ATR. Now that can be done in any time frame, by the way. So yes, one methodology, especially for stop losses, is to utilize ATR below a swing high or low. Below a swing low. So that's something I can talk about at a later time. I don't want to get bogged down into that. But absolutely, I do use ATR. It's not part of my core criteria. What is liquidity levels, swing highs and lows, fair value gaps, and gamma. That's like the core of everything I do.
All right, I think the one last question is, do you use Footprint or do you use Bookmap? I actually use Bookmap a little bit. It's really nice, but ever since I started going back to the office, that I haven't really like used it that much because I'm trading off my phone. So, but it is nice to have though. But how about you, Kevin?
I have used a Bookmap. Now I'll say this: Bookmap's going to tell me a little bit differently as far as what types of orders compared to what I'm looking for, the liquidity levels. It's actually going to be the exact opposite. I like Bookmap. However, I find that too many tools becomes confusing and distracting. So I actually have removed Bookmap as one of my tools.
I actually totally agree with you there because I'm a huge believer in like decision paralysis. Sometimes less is more. So for me, I just keep my essentials. Like I used to have maybe I would say 15 to like 20 indicators, but now it's just like sometimes I keep it basic, where it's just a VWAP and just like maybe the 9 and 21 EMAs or maybe the 113 or 223 EMAs. So it varies, or 233, I mean.
Yep. And I'll take this last one just before we go in here because we're about 20 minutes to start. How do you find your liquidity levels? And please, guys, if we missed your question, please ask it again later on. We're going to be watching the chat also. And so please actively ask questions and we'll try to keep it concise. Liquidity levels are at swing highs and lows. Okay. For intraday liquidity, I'm looking at 15-minute chart swing highs and lows. Okay. Now you're going to sometimes have swing highs that are barely above each other. I'll just take the highest. So for example, if you have a swing high on ES on the 15-minute chart of like 5,500, and then you have one that's like 5,502 and 5,506 or whatever, I'll just take the top one, because if they're venturing into those territories, they're going to take out those levels that are stacked on top of each other. Okay. So, but the 15-minute chart is typically what I use for intraday trading, swing highs and lows.
All right, just making sure. Can everyone see the screen? The screen share?
Can everybody here see that? Okay, I think we're good, Yulo.
All right, I think it's 9 o'clock. Do you want to get started, or should we wait one more minute or two?
Let's go ahead and get started. Guys. Thank you so much for coming to the training. I thank you, Eula, first and foremost. I appreciate your help and guidance and work you put in to educate others in futures. I remember our first conversation in futures, just a few months back, picking your ear for 30 minutes or an hour or whatever it was. But there's been a lot of questions on futures. What it is, first of all, how to do it, why do it, as opposed to SPX options. Pretty much everybody here knows about options, SPX options, etc. But futures, being a similar device, has been asked a lot about. So hopefully you guys get a ton from this. Hopefully it answers a heck of a lot of questions. Hopefully it makes you a believer in futures, because I'm a big believer in futures now. And truth be told, I've been a trader for 15 years, but I've been trading futures because I signaled on here, if you're brand new on Rippy, since about February. Most of that was options, SPX options and others. But I found a niche in futures, and I actually made that switch because I got so ticked off at SPX time decay, zero DTE time decay, and got so ticked off how I could be right over and over again, but it wasn't right fast enough if the market chopped, or if it just moved a little and not a huge volatile amount. And so I was like, to hell with this. I'm going to learn about futures. And so that's what I've been doing ever since, for the last 2 or 3 months, is focusing on futures, and focusing on trading it, because it's a pretty exact science, guys. It is not. There's not a whole lot of leeway. Those markets are incredibly well managed by the algos. And so you'll find that there's a lot more precision in futures than there actually is in some of the other markets. So, but yeah, Yulal, go ahead. Please tell your story.
Oh yeah, no, you've been doing a really good job, Kevin. For me, I started futures about 15 months ago. So it started off with prop firms, then I just kind of went down that rabbit hole and just never left. So then one of the, like you mentioned, one of the best things about futures is you don't have to worry about the Greeks, and it's all about price action. So, and at the end of the day, it really comes down to, because if you really look at futures, it's exactly like stock options. I mean, stock buying, where you're buying the shares. You buy high or you sell low, or vice versa, right? But it's, if it goes up when you're buying it and you're long, then you make money. If you go short, if it drops, then you're making money. And at the end of the day, it's just so much easier, because if you look at it, it's almost like 50-50 chance whether if you're right or you're wrong. But I mean, of course, it gets a little bit more complicated than that because of psychology, but it doesn't get any better than that compared to options.
Awesome. Let's go ahead and get started with the slides.
All right, so I'll start with the first slide. So what are future contracts? Future contracts are standardized agreements to buy or sell an underlying asset at a predetermined price and date. These assets can range from like agricultural to cryptocurrency, energy, equities like ES or NQ, interest rates like T-bills and Fed funds, then metals. Then also these contracts will specify the quality and also the delivery date of the asset. This is like options where they expire. And for example, equity futures tend to expire, actually they do expire every quarterly, while others may expire for 1 to 3 months. Do you have anything to add, Kevin, before I move on to the next slide?
Well, no, that's great because every once in a while, when we have that overlapping time, just for you guys to know, in futures, it does change every quarter. And when we start getting close to the changeover, things get a little confusing because you have the new contract versus the old contract. So for most of the time, you won't have to worry about that. But just know that these do have an expiration, quote unquote. This doesn't mean you hold them, guys, but there is an expiration, 3 months out. And when we get close to the changeover, the previous week and a half before, that's when you'll start seeing the new contract values come out and then the existing one coming up for expiration. So that's really the only thing I'd add to that.
And right, and speaking of the expiration, they do expire every quad witching. So whenever you hear that term, you know that that's when the future contracts will expire, especially for the equities. And typically, what you do is that week of quad witching, especially the Monday or Tuesday, that's when you want to roll over to a new contract.
Yep. Okay.
You want to go ahead and take this, Kevin?
Yeah, I'll go ahead and take this. And I do have a that came in here, and I'm going to answer it while I do this. So terminology, it's pretty simple stuff here. Lot number, that's just the number of contracts. So if you hear me say, two contracts, that's all that is. It's now that being said, there are micros as well, and micros reflect a tenth of the value of the regular minis. So if 1 ES is the same as 10 micro ES. So if you guys see anything like that, just know that that micro is 1/10. It moves 1/10 in the amount as the regular ES or NQ. Same goes for NQ. Let's see here. Globex, global electronic trading platform used for futures. This may or may not matter to you guys. This is kind of like the backbone of this whole system that they built for futures. Regular trading hours. Regular trading hours for futures is 23 hours a day, 5 days a week. Now, that's something you guys need to pay attention to every single day. They close at 5 p.m. and reopen the following day, 6 p.m. Eastern time. Okay. Ticks. Ticks are the smallest price movement. For NQ and ES, that's 1/4 of a point. Okay. So when you hear one tick, that just means 0.25. It does not move like SPX, where it's, by the cent. So futures will move by 0.25. Okay. Minis, I already went over that. Micros. Okay. Perfect.
Right. So there's one thing I do want to add. When it comes
Please do.
to the regular trading hours, I know you mentioned it's 23 by 5. That is correct in most cases, but there are some exceptions where if you're trading like weird tickers like agriculture, like cattle, or maybe like cacao or cotton, I think they do open weird hours. You do have to check. It's like I think some are 8 a.m. or 8:05, and they close like at 2 p.m. But typically people don't trade those type of tickers because they don't move as much as other tickers like ES or NQ or RTY or gold. But
I would say precious
if you do,
metals and oil would be the next most popular after indices. Would you consider that to be true, Yuval?
it is, but the most popular one that most people don't really trade, especially for prop firm, is actually T-bonds. Those are really, if you look at the volume, they are heavily traded more than NQ or ES sometimes.
Interesting. Okay. I just learned that, so that's new to me. I do have a question here. It says, why do you prefer ES compared to NQ? Are you okay if I go ahead and knock that out right now, Yuval?
Oh yeah, sure. Go ahead.
Cool. I like trading ES because, frankly, I can catch a whole move with a decent sized lot. Okay. NQ moves very, very fast. It can be very, very volatile up and down. Okay. You could easily go 25, 50 points up and then retract 25 points. So you have to have a much, at least in my personal opinion, much more of a bias to scalping if you're going to do NQ. ES for me is a little more conducive to giving you guys an alert and capturing 20 points over an hour, or today 3 hours took forever. But NQ for me, at least personally, is hard for me to signal because literally that move can happen in the blink of an eye, 10, 15, 20 points. I mean, seconds. It's so fast. And so I really appreciate ES because sometimes it moves really fast, but it moves so methodically for levels, for fair value gaps, and the way I trade that it's something that's easy for me to signal. It's easy for me to trade. So I will scalp NQ, but I will not signal scalping of NQ.
Yeah, I totally agree with you because it's hard to signal NQ since how fast, I mean, based off the movement. But if we were to do like voice chat or like some type of VC, then it'll be a little bit easier. But ES is so much easier to signal for sure.
Well, think about today. I mean, the NQ dropped 700 points or whatever it was, and how much of that was just in the last, gosh, I don't know, hour, half hour. A signal from me could pass somebody by, 50 points down the road. And so that's really, really tough in having to do that.
Oh, yeah, for sure. All right, this next slide is the movement of futures per tick per point. So the most important ones that you really want to look at on this page is you need to understand exactly what's the minimum tick size of how each ticker moves. Like for instance, SP 500, it moves every 0.25. Or if you look at NASDAQ, it's also the same. But if you do the YM or RTY is 0.1, where Dow Jones is 1. Most people do use ticks, but for me, I like to use points. So if I ever like do risk management, I always go by how many points am I willing to lose for NQ. Usually it ranges from like 10 points to 15 points. So I know if I'm going to lose 10 points for NQ, it's going to be $200. So and the other thing that you also need to keep in mind is all these future tickers, they're based off of the ETF tickers on the right. So for instance, ES is based off of SPY, and Q is based off of QQQ. If you do like RTY, that's based off of IWM. So that's why whenever I do trade, I'll also have QQQ chart open side by side with NQ. Oh, and one final thing I want to point out, Kevin, do you know why they actually have this point system? Like for instance, if it's like 1 point of ES is $50 and 1 point of NQ is 20, do you know where they got that from?
I couldn't tell you. No.
All right, so it's how like options is actually when they exercise options, what that means is whenever the option contract that you buy, if I buy one contract, I'm obligated, and if it does expire, I'm obligated to buy 100 shares of whatever ticker that is. So let's say if I get one option contract of Tesla, once I hold it to the end where it expires, then now the broker is going to force me to buy 100 shares of Tesla. So it's the same thing as futures contracts. That's why it's called contracts, because you're basically saying that if I hold this contract until expiration, I'm going to buy 50 times of whatever the current price is. So if I buy one ES and I hold it to expiration, then I'm going to buy whatever the current price I bought that contract at times 50. And the same for NQ. So whatever contract I buy NQ at, I'm going to buy 20 shares of that. And that's where they get the USD per point.
Gotcha. Thank you. Appreciate that. Awesome. Anybody with any questions on that last slide before we move on? Okay, Barnabas, yes. Barnabas says, once I was up 500 on NQ and I went to go sell it, I was down 150. Classic NQ. That happens all the time, especially if you are heavily positioned in NQ. That's an amazing way to be right and blow an account, because something can go really, really fast in your direction and just retrace half. Let's say a move, if you're heavily weighted in NQ contracts for futures, let's say you had like 10 contracts, okay? 10 contracts open or something like that. You could go get a move 50 points in a matter of minutes and it retracts 25 points. That may, depending on whatever your drawdown is, that may actually blow your account, even though you're right. in the correct direction, still by 25 points. So kind of crazy, but position size is absolutely critical.
And that's where scalping actually is king in drawdowns, because based on what you said, if he was up 500 points, $500, that means that he was up 25 points. Then after that, then he held and he lost 35 points to get or actually 40 points to lose 150.
Yep.
Wow.
Yeah, I mean, and it just happens so fast. So next slide here, advantages of futures, guys. This is really the crux of the matter for me, is why I've traded futures. Okay, guys, flexible trading hours. That's a huge one. It's open all day pretty much, except for that closing time. I'm talking ES and NQ. Okay, it's open all day. If you wanted to trade at night, you can trade anywhere at any time. So it's very similar to Forex in that. Forex is actually 24/5, but it's very similar to that in that you can pick your schedule. I typically pick the market, normal market hours, and sometimes pre-market if I see a nice move that materializes. So I do like that. No Greeks. I personally got tired of time decay. I got tired of time decay and being right. I got tired of entering SPX or SPY and being right in the market move, let's say 10 or 15 points, but it did it slowly. And I just watched the value dwindle down, just trying to catch, the value somewhere where the IV would be high enough to give me 50 or 100%. I just got so tired of being right, but not right enough, fast enough. Because volatility in options, especially in the 0 DTE, is what it's all about. You have to catch into a wave that's going to carry you quickly for those things to go. Especially, but once you get in the money, that's a little different. But for me, that was the first most attractive thing is I'm a good options trader and a good SPX trader. I'm an even better futures trader because now I can be patient for a move. I don't have to worry that this thing's only moved 5 points in the last hour. I have to dump it because it's going to zero. No, I've maybe made 5 points of profit and I just have to be patient. Okay. Trades like shares, we already mentioned that. Ton of liquidity. Most of your futures will be on one tick spreads. Tons of liquidity up and down. These are traded all over the world. Huge liquidity. Liquidity really, really factors into my trading. So just know that there's a ton of people trading. There's never a shortage ever of these options, or excuse me, of these futures. Unlimited buying power. You can buy whatever you want. Obviously, in prop firm, you're going to have limitations based on the limitations they give you. But theoretically, if you had enough cash, you can buy as much as you want. Let's see here.
And also to add on top of that, the limited buying power, unlike options where if you have a cash account, you're basically limited to the amount of buying power that you have for the day. But with futures, you don't really need to worry about taking a loss because you can always get back into that position, even if you're right. So that's why it's really important when it comes to futures. If the trade isn't going your way, don't be afraid to cut your losses because you'll always get back in whenever you want.
Yeah. Okay. So I have two questions. Okay. Or comments. Elliot, if you're saying you blew your futures account with futures, those moves are good if they're on your side, but you can liquidate if you're wrong. Absolutely. Just like any other financial instrument, there's always risk. But stop losses in place are absolutely critical. So I'll get into more of that when we actually talk about trade setups and how I do things and things like that. But just know, you have to go into a trade with a plan. Notice that when I signal, it's with an estimated entry. I'll let you know. A stop loss and a take profit, if not 3 or 4 take profits. Every single trade has a plan. Okay. You can't go into it just saying, I think it'll go up or I think it'll go down. It just looks like it may go down. So levels in entries, especially on futures, are an exact science. Guys, I need you to know this. Futures is so well managed with the algos, it is an exact science in many cases. Now, there are times when dealers and market makers obviously will manually interject in the market, like today, which is just straight up dump. Okay. That wasn't just, algo selling off. They were clearly selling huge positions. But on a normal day-to-day basis, the algorithms that are running 24/7 or 23/5, I should say, are so efficient that they almost become predictable to a certain extent. So learning levels and liquidity levels is really, really important, guys, and it's not by chance. Let's see here. I think it on that one. Okay, go ahead, Neil.
All right, let's go ahead and move on to the next slide. The disadvantage of futures. So if you were using a cash account, you could definitely lose more than your initial investment, unlike options, especially if you don't have any type of risk management. Futures is all based off of news. So whenever you see like FMOC or CPI or PPI, like options, it moves a lot. So that's why every week I always post in the economic news, like the type of news that will come out during the day, whether it was like T-bonds or whether it was like mortgage, like 30-year mortgage, those will always impact futures and also the market. But I'm not exactly sure why sometimes some people don't cover economic news, but it's really important, especially if you're trading. Then
Yep.
last but not least is when you have limited buying power, it's so easy to like revenge trade and also kind of get caught in the moment, and you'll just keep on blowing your account or keep on losing money because you don't have anything to restrict you. So that could be a disadvantage, especially when you have self-control.
Yeah. Now, going back to what you just said, Ulaw, about the news, I want to add something briefly to that. For all futures traders in here, if you know, well, first of all, the news cycle is very, very important. All the economic economic indicators that are released for the country, those are on a schedule, guys. I use forexfactory.com. I find all the high impact, medium impact stuff. If you're not doing that, there's plenty of websites. And I think Ulaw said we're posting them in the Discord. But that being said, I encourage you, do not have an open position ever for a red high impact news release, i.e., look at what happened today. What was the PMI at 945? And the market just went straight in the tank. What if you had longs open? You would have just blown an account. Okay. I encourage you to never have an open. That doesn't mean you don't trade off of it after the fact. Okay, guys, because there's always going to be typically a big market reaction to those high impact news indicators. Allow those to play out so they don't screw your account. You can get amazing moves 15, 30 minutes after them in entries. Okay. But do not have open positions. Be completely closed when those things are ready to roll.
Yeah, I totally agree because there are some platforms that won't even allow you to trade the news. And at the end of the day, if you do trade the news, you're just simply gambling. And if you do want to trade the news, I don't recommend it. Size down. Go down to like micros, where if you buy 1 or 2 micro, even if you're on the wrong side, you won't take that much of a hit. But at the end of the day, I wouldn't trade it. I used to trade it all the time, but now I don't even trade it anymore.
Well, they'll skip, guys. Also, your stop market orders may get skipped way down. So let's say, for example, if you have a position at 5,500 ES, okay, guys, and this is if you're already trading, and you have a stop loss at 5,490, okay, and CPI rolls out, and you have an open position, CPI may drop the market 40 points within 30 seconds, okay? You will get stopped out, but it won't even be at your 5,490. It may be 5,470, okay? It's going to be the first available contract that the market offers for fill. So do not have any positions open on high impact. Low impact stuff, a lot of medium impact. Honestly, I disregard it for the most part. But the high impact stuff, always, always close your positions.
And just to add on top of that, your stop loss is completely useless during high impact days.
Yep.
It's going, like you mentioned, it's going to blow through that so fast that if you have like a 40-point stop loss, it might even actually stop out at 100 points. So
Yep.
there's really no point in trading during those times.
Yep. Pure gambling. It's pure gambling.
All right. So when it comes to futures, there are two types of futures accounts that you can get. You either get cash funded account or you can do prop firm route. And this is something that I'm not exactly sure why most people don't even cover this, but if you live in the US, if you live in the United States, taxes and death and taxes, you need to really worry about the tax benefits and also exactly what's going to cost you in terms of taxes. Like for instance, options, they're going to heavily tax you and there's also wash sales. But when it comes to funded accounts, you have the 60-40 rule. So in options, they basically charge you based off of either if it's a long-term position or if it's short-term position. Most cases, you are short-term. So they're going to charge you whatever tax bracket you're in. But when it comes to futures, at the end of the year, whatever profit that you make, they do the 60-40. So 60% of your profits will be charged at 15% rate in terms of taxes, and the rest of the 40% will be charged to whatever your income bracket is. So for instance, on the example in the screen, this year I made $10,000 profit. So 6,000 that profit, I'm only going to be charged 15%, where the rest of the 4,000 profit, I'm going to be charged 30%, assuming that is my tax bracket. So at the end of the day, I'm still only paying 2,100 of taxes on profit. But if I were doing options, I made $10,000 in profit. If my tax bracket was 30%, I'm paying $3,000 out of pocket. So I'm paying $900 more than I am in futures. The second part where futures is really nice in terms of cash funded is no wash sales. I remember the time when I was trading options, I got murdered in wash sales because I would be trading the same ticker over and over again. And for those that don't understand what wash sales is it's basically a rule where if you lose on a trade for a certain ticker, you cannot trade that same ticker in 30 days. Otherwise, you wash out that sell or wash out that loss. And whenever you do wash sales, whatever loss that you take, you can't claim it on your tax at the end of the year. Then the last but not least is the capital losses. You can carry over $3,000 of losses per year and it will carry over. So if I made, let's say if I lost $10,000 this year, I can go ahead and claim $3,000 in taxes and it will carry over the next following tax years.
Yep.
Is there anything you want to add, Kevin, before I move on to the next slide?
No, that's all good. All good.
All right.
Okay, tax benefits for prop firms. A lot of us are trading prop firms. Become a 1099. Now, I can't personally speak to the benefits. I know the benefits of 1099. They're all listed there as far as your write-offs. But is that a definitive thing? Is a 1099 for prop firms? Just so we're clear. I know they'll pay you. They clearly pay you on a 1099. But you are able to do deductions specifically related to this?
You can. So that's the beauty of 1099s. So whatever you're a 1099 contractor, whether it's through prop firms or through other work, you can actually claim a lot of things. You can claim, if you're working from home, you can claim the office space that you're using. You can claim technically electricity if you're using cell phones, if you're any type of work supplies or equipment like computers, internet, power. So there are a lot of benefits when it comes to 1099 contractors. So as long you're not going overboard with it, then
and it's related to your training or to your to you being to your profession, I should say.
it is. And the beauty of it is, let's say for instance, ever since I started off with futures, I blew so many accounts. So I wasted so much money. But because since I'm a 1099 contractor, I can claim those account purchases as deductions. So let's say I spend $5,000 on new purchases of accounts, I can write that off at the end of the year.
Yep. I don't see that happening with options.
No, you won't be able to, unless actually you won't be able to at all, unless you trade under like some type of LLC and maybe you can claim claim it that way.
Correct. Or if you're a contractor for an actual trading service or something like that, possibly. But yeah, there's obviously clearly benefits to being a 1099.
Oh, all right, moving on to the next slide. The guy covered that question in chat where
Can you write off
write off cost. Yep.
Cost of purchasing and activations? Go ahead, Matt. You can go ahead and answer that.
Yeah, you most definitely can. It's because it's part of the 1099. Just make sure that you get a payout, because otherwise, if you don't get a payout, you're not a 1099 contractor.
So let's make money doing it, in other words, for crying out loud.
Right.
Okay. Okay. Go ahead. Go ahead on the getting started with cash.
So if you want to get started with cash funding account, that just simply means you're funding your own futures account. The most popular ones are NinjaTrader and TraderVate. You do have like Iron Beam, AMP Futures, EdgeClear, Optimus Futures, and IBKR, TOS, and TradeStation. But when it comes to these type of brokers, you do have to look at the commissions, because every single broker or exchange, they do not offer the same type of futures tickers that you can trade on or trade with. And sometimes there are some brokers where they charge you $5 for a round trip in terms of buying and selling a future, where others may charge you an arm and leg like $8 to $10. So it does vary. So that is one thing that if you do ever open up your cash account, you do want to kind of do your own research and see exactly what type of tickers you want to trade and see if that exchange has those type of tickers that you want. But at the end of the day, I do not recommend IBKR or TOS or TradeStation for futures. They're not exactly futures friendly. So just definitely do your own due diligence.
TradeAvate, honestly, I mean, it's a good platform for if you're going to do cash futures. And guys, you may have the bankroll and you may want to do cash futures. It's not for everybody, just like prop firm trading is not for everybody. So sometimes for some people, cash trading, you know, they may have an account for 25K or 50K or whatever of cash. And that's cool. You can also trade cash with that. There's no PDT rule or anything like that. Just so you guys know, associated with futures trading. But cash futures it's similar in that the movements are all the same. It's just that you are using your hard-earned cash to fund the account.
And one final thing, just to since we're on the topic of cash funded accounts, whenever here, let me go and share a different screen. So we're going to use TraderVate since that's the most popular one that I know of.
Mm-hmm.
So you do want to like just type in like TraderVate margin. So when it comes to margin, this is simply exactly how much money you need that account to go ahead and start trading. We're just going to go ahead and do equities.
Now, do you have a slide for that? I thought you did, Eula, on that specifically.
Did I? Let me see.
I think you did.
Oh, you're right. You're right. Okay, let me go ahead and stop sharing and switch back. I actually got ahead of myself.
All good.
Okay. So when it comes to this slide right here is for TraderVate. So like I mentioned earlier, TraderVate or every single exchange has their own margin. So when it comes to TraderVate, if you do fund your own account, if you have, let's say you want to trade MES, which is micro SP 500, you need at least a minimum of $50 to trade it. But I believe for TraderVate, you need a minimum of like $250 or $500 just to get started. But you need at least $50 to buy one ticker or one lot of MES. If I were to buy NQ, on the other hand, NQ is $1,000 minimum to buy one lot of NQ. And you'll see these two columns where it says day and initial. Day just means day trading. So if I were to buy this lot the day of and sell it within the same day, this is how much I need, how much margin I need to buy and sell one lot. But if I want to hold it overnight, then I need almost, I would say, either 15 to 20 times the amount. So for NQ is almost 20,000 just to hold it overnight. And if you have a big cash account, then it may be worth it. But if you don't, then just focus on day trading.
And also overnight in terms of futures for ES and NQ, just to be clear, overnight means that space of time between 5 p.m. and 6 p.m. It's not, over midnight. It's literally that 1 hour window that you have to take that position and hold it through the turnover the next day.
That's right. And the only benefit of kind of doing overnight is if you really buy it low and you want to hold it for like 400, 500 points, like over a time span of like maybe 2, 3 days or maybe a week. And that's the benefit because like we mentioned early on, futures are contracts, right? So they expire every quarterly. So technically I could buy it at the beginning of each new contract and hold it for the next 3 months. So if the market moves for the next 3 months, I'm making so much money because I'm holding it for 3 months. But I need to have that big enough count to do so.
And there are billion-dollar hedge funds and obviously market makers. They do this type of thing. You don't have to do that, but they will have huge futures positions that they'll hold for weeks or months or whatever there. And so the whole rollover thing is very important for them. For us, we're in and out typically in the same day. The rollover thing's not important. The overnight thing's not important. At least what I signal. I have no interest in closing or keeping my options positions open from 5 to 6 p.m. at all. Not worth it.
All right, I know in chat there's Wesley asks, what do you mean by TradeStation isn't futures friendly? Are you referring to the actual aspect of trading or perks to make trading easier? So what I mean not futures friendly, meaning is either commissions or also the margin. I just looked it up for TradeStation. It's been a while since I did. If you want to hold NQ overnight, you need let me see, where was it?
Well, what's the intraday you allow for TradeStation? What's the intraday?
It is 21,000 compared to TradeAway, which is only 19,000 and some change.
But what's the intraday margin required? Like just the day trading?
Intraday is 1960.
So that's close to TradeAway. TradeAway's I don't know of anybody lower than TradeAway, but I'm certainly could be wrong.
I mean, but it's double though. If I want to trade NQ, TradeAway is only 1,000, where TradeStation is 19,600. Or actually, wait, they have intraday initial and intraday maintain. So you actually need 2178. So it's double.
Gotcha. Okay. Yeah. So if you're going to do cash futures, TradeAway, I mean, based on what I actually have a TradeAway cash account too. And I specifically picked it for the reason that the user interface is great and smooth and fine and easy to understand, but the margins are really, really low.
And also one thing to mention, TradeAway, the reason why I put like NinjaTrader and TradeAway on the slide is because NinjaTrader a few years ago bought out TradeAway. So they're the same company, they're owned by the same company, but they're two separate companies. Okay, there you go.
Okay.
You want to go ahead and cover this, Kevin?
Yeah, go ahead. I was just reading the question. Sorry. So pros and cons of cash funded. Pros, yes, account risk management tools available withdrawal same day. It's your cash. It's in and out. You don't have to wait for it to settle like options. You can, when you send in money to TradeAway for futures to fund your cash account, it'll be available to trade. Typically, my experience is about 2 hours, maybe 3. So they're ready to fund your account, and then the withdrawal, same thing. You're going to get a quick withdrawal. Able to hold overnight for sure. Yes, the downside though is the risk reward for me. It's the risk involved with cash futures compared to prop. So the disadvantage is, like everything else, is you have your hard-earned cash at risk. And if you don't know what you're doing, you're going to lose your hard-earned cash. It's no different than options going to zero. Yep. No tax write-offs for 1099. Okay, cool. I think that's good. Next slide.
Okay, and also the reason why I also put it this kind of like picture on the side where it has like daily loss limit and weekly loss limit a few months ago when I first started prop firm trading, this option was not available in TradingVate for any prop firm account. But earlier today, I actually found out that they finally enabled for these prop firm accounts. So now you have this risk management, I guess, setting available for all traders. But before it was only for cash account traders, and that was the benefit of having your own cash account because you have enhanced risk management tools.
Yep.
All right, prop firms. Prop firm stands for proprietary trading firm. It's basically a company that provides traders access to capital and returns of a percentage of the profits generated. So you'll have prop firms that that does like either futures, forex, or stock, but you'll never hear prop firms for options. I'm not exactly sure why it doesn't exist, but right now you only have these three types of trading in terms of prop firm.
Let
Prop
me
firms are
stop you right there. There
okay.
are some that do have options. It is a significantly less amount, but there are a few. It's just a few. So just for clarity, there are a few that do allow options.
Okay. Yeah. I mean, just keep in mind, I actually, okay, I didn't know that because when I was kind of doing the slide, like maybe a few months ago, probably beginning this year, there weren't any options prop firms that I was aware of. But
there's only
no, that's
one or
good to
two.
know.
Like if you go into Google, there's only like one or two that are like, you'll go and Google search, best prop firms, for example, and there'll be, a list of 50 different ones for Forex and for futures, and there'll be like one or two for options. So it's not nearly as common. It's much more rare. But frankly, I don't want to get, personally for me, I don't know about you, I don't want to take a step backwards. I want to stay in futures.
I totally agree. Okay, yeah, no, that's good to know. I'm surprised they went down that route. And also the good thing about prop firms is you are adhered to their trading rules and also their valuation rules. So it does make you a better trader. Then also when it comes to prop firms, they offer a lot of different size accounts, whether it was like 25K to 200K to 300K. And when it comes to more capital, that means that you can also increase the position sizing.
That's right.
Right.
Yeah. Nothing to add. Can you go next slide? Or is this the next slide? I'm sorry.
Yeah, this is the next slide, the pros of prop firms.
Yes. Okay. So one of the greatest pros of prop firms is your risk management and actually how much it costs you to do it. Okay. Instead of losing your hard-earned money, losing 5,000, 6,000, 10,000, 15,000. Here's how most prop firms work, guys. You are spending anywhere from $20 to $500. There's a lot of different prop firms with a lot of different deals. Okay. Different payouts, different criteria. Okay. But what's happening is those prop firms are going to be putting you through step one. That step one is you are paper trading. This is what it is. The first step is paper trading because they want to see that you can pass. And then you go step two. That's where you can start making money, is that you've proven yourself the first time, you prove yourself the second time, you actually can withdraw. So for example, you can take 30, 40, 50 bucks on step one, 100 bucks, 150 bucks, depending on the platform for step two. And you can start pulling thousands and thousands and thousands of dollars out from that one account into your bank account, because there's a lot of things happening behind the scenes. These prop firms are making money on your, every $30 account and $40 account and all this. But what they're also doing, and the reason why they're doing it and giving you this criteria, is they're copy trading you behind the scenes, meaning the best traders, if they find that John Smith has a 90% win rate and he's he's an amazing scalper and a 90% win rate, they are copy trading him internally. These guys have numbers up, down, left, and right of all the metrics of every single client, all in the back end. And they will see This is our top 2% of all traders. These are the guys who win 80% of the time. They have risk management. They have proper profit taking, and they simply copy trade them with real money, cash futures behind it. So when they pay you out, they already have a system that pays for itself on the front end, but they're making money on the back end. This is why these things exist, is because there is heavy money behind finding the most talented traders that go on these prop firms. For us, it's a great deal because we can turn very, very little capital into a lot of money. For them, they've identified the best of the best, and they're going to pay you. Does that make sense, guys? One of the other benefits, you can have multiple accounts. Every single prop firm allows you to have multiple accounts. So you can have 50,000 accounts or 250K accounts, and you just trade them simultaneously. Or you can go back and forth and just rotate them. That's what I'm doing currently. It's just however you feel the best way of doing it is. But you can trade 10 accounts at once, 20 accounts, depending on the prop firm. So that allows you to expand, because a lot of these prop firms have certain payout thresholds, meaning they may only pay out $2,000, $3,000, $4,000 at a time to you. But if you have 10 accounts, guess what? You multiply that by 10. So there is an advantage to having multiple accounts. Let's see. That's good. Anybody with any questions on that specifically? So Egelmoth, okay. I said 2%, and that's just conjecture. But they have all the internal numbers for every single trader. For you, for me, for anybody who's ever trading. And whoever they like, which they're going to have whatever their criteria is, they will be copy trading internally.
And also, just to add on top of that, there is a platform called Top Step, which we'll cover later on. They do Top Step TV every single day, and one of their sessions they do throughout the day is to kind of cover the highlights of all their traders, like the traders that did the best this week in terms of payout, in terms of how much money they made, and in terms of also intraday, like which trader is doing like really well, like as of like right now. Whether if they have like 10,000 P&L or 20,000 P&L, they'll cover that, and they'll do trading analysis on like their risk management and stuff like that.
Yep. And so they'll say, Ulaw is the man. He's consistent. He has good risk management. And then they'll just copy trade. I mean, they'll allot a certain amount of capital, whatever it may be. That's their own internal decision making of how they do it. They'll allot a certain amount of capital to a trader, or they could even pool. They could see where a lot of their traders may have entered in approximate positions and take a bigger position. I have no idea what their internal criteria is. Every prop firm is different, but they are using the data. Imagine what you would think if you had the best 1,000 traders on the market at your disposal, and you just simply could copy trade them. Do you think that could be worth millions of dollars? Yep, for sure. That's exactly what they're doing. So they've created an ingenious model that allows you to get in the game for low capital. If you're skilled, you'll get paid really, really well. And they make money on the back end.
And speaking of making money, this is also the cons of prop firms. So one of the huge things about prop firms, where this is one of the ways they make money, is that not only do they give you different type of accounts for cheap, but it's so easy to blow your accounts without risk management, because you have the mindset of, hey, this is just paper trading. So it's not real money. So it's not gonna hurt if I lose money. So people don't really have risk management in place, and they'll just constantly blow accounts after accounts and revenge trading and tilting. And I've been through that. So, yep. And especially if you also copy trade instead of just trading one account. If you blow one account, let's say for instance, I used to trade, I actually still do, but At the start, I traded 20 accounts, 20 evaluations. So I upload one evaluation. Since I'm copy trading, I upload 20 evaluations. So it does become pretty costly over time, especially all those new accounts accumulate over time. Then the con, and also another thing about prop firms is you are required to go through their kind of, you gotta have to jump through the hoops, whether if they have one or two tests or whatever type of restrictions or rules, you have to follow it to a T. Otherwise, you give them a reason to cancel their account or fail you, or maybe deny some type of payout. Then as for um, one thing that's pretty common is technical issues. Let's say, for instance, Apex recently, like the past 2 months, they've been having a lot of rhythmic issues, and sometimes it's vice versa. Maybe this month it will be rhythmic, next month it will be trade rate. Then, as for the other con of prop firms is they have a lot of rules. Some prop firms have no rules, but if you look at either ETF or Apex, they enforce the rules, whether it was the trailing drawdown, consistency. You can't trade during any type of news. If you do high frequency trading, which is just like scalping nonstop within the matter of a few seconds, that's forbidden sometimes depending on which platform you're doing. And also you have flipping and straddling, where if one day I'm making like $10,000 and I hit my daily goal for the week, so the rest of the trading days I just flip by just going in and out of position just to get that trading day. And a lot of platforms won't allow you to do this. Then the last con for prop firms is you can't hold any positions overnight unless you get an account that's designed for it. And the only account that I know off the top of my head is ETF, which is Elite Trader Funding. They have a account called Diamond Hands, and they allow you to hold overnight, I believe, however long you want. But at the same time, it's costly and it's not worth it because they don't allow you to have a lot of lots for your position sizing. Then one final thing is all positions must be closed by 4:59 Eastern Standard Time, with the exception of Top Step, which they actually close a little bit early, which is 4:10. Is there anything you want to add, Kevin, before we move on to the next slide?
No, that's excellent. I'm just going through the chat here. Okay, that's all. Okay, go ahead next.
All right, so when you get if you want to get started with prop firms, you want to decide exactly what type of trader you are, whether you're a day trader or if you're a scalper. Then if you like trading on your computer or mobile, and after that, then you want to pick what type of account do you want. Do you want the trailing drawdown, end of day drawdown, static drawdown? Then after that, you want to pick the account size. The bigger account you have, the better, because that means that if you go enter a trade and it's not going your way, you have more room to make errors. Then one final thing is you really do need to read the in and outs of all the terms and conditions for each platform, because I have seen people where they get denied or have account closures because they're either trade on the VPN, or maybe they're like having other people trade for them, or maybe they have different like household members with too many accounts, and you're just giving them an excuse to either canceling your account or terminating your contract with them.
A lot of that does have to do, though, with actual people scamming. There's been things about that where they are truthfully attempting to scam the prop firms, and so they know there's a lot of money to be made, and where there's a lot of money to be made, there's going to be people who try to scam it. It's just how it is, and so. But you guys, under normal trading circumstances, having consistent position sizes. One thing that, for example, that raises red flags is if, let's say, you just went full balls to the wall, 30 lots, you caught a move, you qualified in a matter of 10 minutes on a move. You're like, that didn't take, look at what they're thinking behind the scenes. They're like, that didn't take any talent. There was no risk management. There was no stop loss in place. They simply had a ridiculous sized position, and they happen to be right. Remember, what are these guys doing? They're trying to identify talented people. They don't care where you are. They're trying to find talented people who are consistent. How would you want your employee to act if they were actually trading with your capital? You say, well, I want good entries. I want stop losses, take profits, and risk management. That's what you'd want if you were paying somebody as an employee. So this is what they're looking for behind the scenes, not some guy that had 30 lots and had it open before CPI and it went up 50 points and aren't they a genius? They just made $25,000 on a paper account. Okay, that's not what they're looking for. They're looking for the guy who's making $2,000, $3,000, $4,000 a day, depending on the account size, and is able to do it often with lot sizes that are reasonable and not all over the place. So just put yourself in their position of what do they want to see? They want to see talented freaking traders. They don't want to see idiots, like the roulette table, because that's in fact what pisses them off and bans people, is because they'll have people that have literally went heavy position on CPI, half their accounts in one direction, half their accounts in the other, and one of them's going to hit. What kind of talent is that, guys? That's not talent. That's pure. That's just manipulation. So that's not the type of stuff that they want to see. They just want to see that you are a real person using real trading skills. That's all.
That's right. And all the bad apples just ruined it for everyone else.
Yeah. So they have to put these things in place for the people who try to scam and work the system, rather than just saying, I'm going to be a great trader. I'm going to use risk management. And guess what? I'm going to blow a few accounts. It's part of it, guys. You're going to blow accounts, by the way. This is disclaimer. You will blow prop accounts. You'll probably blow several of them. What's going to end up happening, though, is you're going to start honing your skills when it comes to entries, stop losses, and profit taking. It's going to make you a better trader. It has to. If you are getting better and blowing, if you're blowing accounts and getting better at it, you're going to stop blowing them less and less. And before you know it, you're going to be like, wow, look at the strides that I've made in seeking entry for my trades and exits and all this. So it's a really powerful tool. Prop trading is. It's really powerful.
All right, in chat, there's a question: why don't firms use Thinkorswim? That's all I know. I'm not exactly sure what you mean by that, but I'm assuming you're asking why do firms connect to Thinkorswim? Is that what you're talking about?
Well, I think maybe why don't they maybe utilize an interface that's Thinkorswim or something to that effect? Is that what you're trying to ask? Why don't they use the Thinkorswim interface, plug it into their account? Jay asks, what's static drawdown? Can you comment on that, Yula?
Oh yeah, I'll cover it. It's actually, I think it's part of the next few slides. So
Okay,
we'll
cool.
definitely cover that in a few slides down.
All right, yeah, data feed. We don't have to go over this too much here. This is just a nuts and bolts thing behind the scenes. See Tradeovate, Mac users, browser tradings, mobile trading. Yeah, some of these platforms suck like Rhythmic, and some are much better like Tradeovate. That's just the facts. And so you're going to find your favorites on this journey. You're going to learn from mistakes and stuff like this, but there's definitely differences in browsers and platforms for trading. I personally love TradingView. I really appreciate TopStep because it has TopStep X, which is TradingView. So I literally don't have to learn anything new. I just use what I've already used.
And on the other hand, I absolutely hate TopStep X. So we're completely opposite. So the main point of this slide is you need to figure out exactly what type of style of trader you are, whether if you're a browser trader or a computer trader. And each data feed / platform does have its advantages and disadvantages. Like Tradeovate is very Mac friendly. It uses browsers, so you can use it on anywhere. Where Rhythmic, it allows you to have a better trading platform, like for instance, Quant Tower. Quant Tower is really superior compared to NinjaTrader, which is also their trading platform that you connect to TraderBait.
Yep.
All right, moving on to the next slide. All right, so this is just the different platforms that I do recommend, because this is the ones that I do have experience in and have gotten funded accounts. So if you were to get Apex, Apex does offer TraderBait and also Rhythmic, but they only offer trailing drawdown. And I'll cover the trailing drawdown and end of the day drawdown and static drawdown in the next few slides. And you also have up to 20 accounts. In terms of Blue Knox only offers Rhythmic accounts, and but they do offer end of day and also trailing drawdown. But you can also have up to 11 accounts and only three funded at a time. So when it comes to Blue Knox, once you hit the drawdown threshold on 3 funded accounts, then you can request more. Elite Trader funding, I used to like them a lot, but due to the recent rule change that they had, they're becoming more like Apex. So you just need to know that you can have a max of 3 funded rules, and they have a lot of different various accounts. Whether if you want to go through TraderBait, Rhythmic, or Diamond Hands, Diamond Generator, where you want to hold overnight. So they have a wide variety of selection. Take Profit, Trader, they do offer both Rhythmic and TraderBait, and they do also it's kind of weird because your evaluation is end of day drawdown, but once you hit funded, there's both end of day and trailing drawdown. But the beauty of Take Profit Trader is that you can request withdraw every single day, as long as long you hit the maximum threshold of each drawdown account. And Top Step, you can have a maximum of 5 accounts now, and they do offer TraderBait and Rhythmic. And the best thing about them is their end of day drawdowns, where if you hit a max daily loss limit, they force you to stop trading for a day. Then if you have anything left over, the next following day, you can resume trading again. You said you got muted. Let me go ahead and check really quick. Let me change the settings so you can mute yourself. All right,
Okay. I may have done that myself. Sorry about that.
No
I may
worries.
have muted myself. So apologies there. Cool. Okay. Yep. So you went over those. Okay. I have nothing to add to that. Okay. Trailing drawdown. This is a big one, guys, especially for Apex. This is Apex is cheap. It's also one of the more challenging accounts to trade, simply because your big days will not outweigh your losses. Meaning, if you make 10 grand one day and make 5 grand another day, or 4 grand another day, let's say you made $14,000 on a 250 account. Your profit target is 15. So as a basis, your trail drawdown is going to come right up with you. So if you make 14,000 the first 2 days and you lose $7,000 the next day, you've effectively blown the account, even though you're net up $7,000. Now, this is done because they want to make sure that their traders are not over trading size and they're consistent, but they also know when to just cut their losses and be done. Okay. This is a huge one that will significantly improve your trading. So just like it says here, you have a 100,000 starting balance, your threshold 97,000. Okay, so you can lose 97,000, or excuse me, lose $3,000 first day. You make 500, your balance goes up by 500, but your trailing threshold goes right up. Just think of it as a window. It slides right up with you. Okay. You next enter a trade and get up to 102. So you've made 2,000 so far. Now your threshold has slid up to 99,000. Again, that $3,000 window on this specific account slides with you. Okay. that continues to go up. Now, there are some prop firms that will slide all the way up, like Apex does, up to profit. There are others that will slide up only to your entry. So, for example, Apex, if you get slid up on your trailing drawdown, it could be, 257,000 on a $250,000 account. Okay, it goes right up behind you. There are other prop firms that stop at the initial value. So if your account started at 250,000 and you had a $5,000 drawdown, for example, once you get to 255,000, meaning you've made 5,000, that trailing drawdown will stop right there. Okay, that's an advantage. That's a better trading scenario for you. So just keep that in mind, is that every prop firm has a different way of doing their trailing. Some are just simply at the end of the day. But Apex is intraday. It literally follows you in almost in real time. So just always keep that in mind when you do Apex.
And just to add on top of that, this only applies for, it's very situational. So when it comes to trailing kind of forces you to be a scalper. If you're not a scalper, then you need to take profits quick, because if you decide to hold throughout the whole day, then you're going to lose a lot of the trailing drawdowns. Whether if it goes up and down, then you may even blow your account depending on your account sizing. But what you mentioned about in a day, that's actually our next slide.
Oh, perfect.
Do you want to cover that since you just mentioned that?
Yeah, in a day is simply, they're going to calculate things not intraday, not in the middle. Okay, they're just going to do it at the end. They're going to say, Kevin, you made $3,000 today. That's your new threshold. It moved up by $3,000. That's personally my favorite, and it's, I think, probably most people's favorite. But like I said, there's always pros and cons to every single prop firm. But that, especially if you want to see a big move, 20, 30 points in ES, the ebbs and the flows of the day can go with you or against you. If your if your position too large, that can really hurt you on a trailing drawdown. But if it's an end of day drawdown and you get your move, no harm, no foul. So keep that in mind.
And also the perk of having an end of day drawdown is if you want to have hold runners, you have that ability to do so. So let's say I go into a position with like five lots. I trim all of them except for one. I can just put my stop in profits and not even worry about worrying about any type of drawdown or affecting me long term. So as long as I'm green, I'm green.
That's right. My preference is end of day, but again, pros and cons. Apex is cheaper. For example, they're the strictest. But I will say this: Apex will really, really help you hone your scalping skills and your entries and exits. I think better than any other platform because that trailing drawdown is so tough.
Right, moving on to static drawdown. This I personally do not recommend. I hate it so much because your drawdown is exactly the same. So every single day, you have a set drawdown where it's stuck. Let's say, for instance, right now, this example that we're using is 100K. Every single day, no matter what, your drawdown is going to be 99,375. That means you have a total drawdown of 625. So if today I made maybe like $1,000, tomorrow my drawdown is still going to be 625. So that means I can only afford to lose 625 every single day, but otherwise I'll just blow up. But that's just the basic was a static drawdown. But at the end of the day, I do not recommend getting this.
And it's not a popular product with prop firms. They may have 15 different options for programs and accounts you can have. Static will be one. So if that tells you anything.
All right, let's go ahead and answer some questions. I know our next slide is going to be the process of going from evaluation to payout or funded to payout. So I know we have some questions about, let me see.
As a first timer going into this, go ahead, sorry.
No, go ahead.
Just a question. As a first timer going into this, who do I prefer? I'd say just wait till the very end, then you can start making some decisions and stuff like that. We'll kind of guide you a little bit, as far as what our favorites are and what we like, and stuff like that. But again, it's also personal preference. There's different size
Right.
accounts, there's different, profit levels on each account and different drawdowns on each account. So it's going to be personal preference as well.
There's one iPhone user saying, I want to learn to trade futures, but I don't know where to get started. Any suggestions or where to start? I don't know anyone who trades. Do you trade futures with your own cash or prop firm? And do you really make money off of prop firms? If so, who do you use? So the answer to that question is I'm all prop firm because prop firm I have the ability to have multiple accounts, and I have made money across all the 5 prop firms that I listed earlier in that chart. So that's why I recommend all of them. For me, I know Kevin mentioned this earlier. We'll probably save this question for later. But for me right now, my top 3 would probably be Top Step, Take Profit Trader, and also Blue Knox, just because of the rules and also the lack of restrictions.
Yep. iPhone says, what are your names respectfully? Well, I know my name's Kevin, and I'm one of the signalers in Rippy. So if you see under the channels, my name's Kevin. And Eulaw, actually, I don't even know. Eulaw, what's your first name?
But it's actually reversed. So my first and last name is Law U. So I just reversed it and the U Law.
There we go.
All right, moving on.
On.
So this slide may be a little bit outdated because ever since I made this, they didn't do the 1-day pass until now it's like 1-day pass forever. So so before, when it comes to Apex evaluation to fund it to payout, we're going to use the 100K account as an example. So when it comes to evaluation, you need the 6K profit. You need at least a minimum of 7 trading days. But now, because they do 1-day pass, 7 trading trades is no longer there anymore. But the main important part of the evaluation is do not break the $3,000 trailing drawdown.
Yep.
Once you pass the evaluation by hitting that 6K profit without breaking that $3,000 trailing drawdown, they're going to prompt you for a option to activate your funded account. The activation account is going to be either, or activation option is going to be 2 choices. You either pay monthly or you pay lifetime. Generally, what I recommend is if you're just starting off doing prop firms, always pay monthly. The reason why is because it's more cost effective. I have not seen anyone trading that started off with prop firms that had or that managed to keep their initial evaluation / funded account since the beginning. That's almost near impossible unless you're like some type of trading god. Then once you get the funding account, then you basically have to start over the test again. So your goal is to make at least the maximum drawdown, which is 3,000. So if you make 3,100, then that's when you're eligible for withdrawal. But you still need 10 trading days and at least 30% consistency, which we'll cover later on in this slide. And you cannot flip in the 10 trading day. Then once you're able to request payout, you can request a payout of either $100, $500 to $2,500. But because of Apex, one thing I really hate about Apex is they limit the payout window. So you can only request a payout window from either the 1st through the 5th or 15th through the 20th. And not only that, they take a long ass time just to approve a payout. The longest I ever seen was about maybe, I would say, 12 days. And
That's not changing. That's not changing. Eulaw, they've made a lot of changes, faster payouts. Now it's, yes. So they've had a lot of feedback because Apex has grown so much and they paid out hundreds of millions of dollars now. Just imagine how much they're pulling in, right? But yeah, so the payouts are moving much more quickly on Apex these days.
Okay. Do you have anything?
And I think it's 85 lifetime now, and it's 85 lifetime for the account now.
That's only during this promotion.
Correct.
So
correct.
Yeah, that's right.
Which
that,
they have now ran
gone,
for like, I think they've ran for 2-3 months straight. So I think I don't know if it's a promotion or if it's just how they're going to do it now. I don't know.
Hopefully that's how they're going to do it. But to my understanding, the promotion expires August 15th.
So we'll see, right?
Yeah. mean, considering how they do the 1 day funded, like Candy now, I don't think, yeah, I think this is too much of a money maker for them.
Correct. And the reason, guys, is because you'll have people that will just size up huge, go, get into a funded account, because the funded account is what you can make money on, and just try their hand at it. And, maybe they do, maybe they don't. But honestly, the bread and butter of prop firms making money is bad traders oversizing. Literally, it's oversizing is the number one thing you will do to blow your accounts. Period. Oversizing, because they allow you to do it. They allow you to oversize huge amounts. Don't do it. Don't take the bait.
All right. There is one question: is for Apex trailing drawdown, are we able to explain it one more time?
Sure. Okay. I'll do that now. Okay. So a lot of people like trading the Apex $250,000 account. Okay. This is just purely an example. The drawdown is 6,500. Okay. And the profit target is 265,000. So let's say on day one, you make $5,000. Okay. Your account value will be $255,000. Your stop out, your drawdown for blowing the account is no longer $243,000, $243,500. Because remember, I told you it was 6,500 on that account. Okay. Your drawdown just got increased by that same $5,000. Remember, it's a sliding window. So now your bust level in that account is going to be $248,500, because it shifted up with your account. If you made $5,000. Now, if you were up $10,000 in that day and ended up at one point in time and ended up 5,000 at the end of the day, guess what you've just done? You shifted up the trailing drawdown $10,000, but when you lost that $5,000 back, you're now coming very, very dangerously close to blowing the account, because it's going to trail you up to the highest $6,500 from the highest value in the account at any point in time. So if you have a position that you don't exit well and you let it go really high and come back down, you've just essentially sucked up the trailing drawdown, and now your profits are getting lower and lower and lower, and you're losing room on the account. Does that make sense? Okay, cool. Yes, risk management is the name of the game, especially with Apex. The name of the game with Apex. Well, with all trading, but like it's really, really serious, because they trail you in real time as your trades go up.
All right, the next question is, which account size do you guys like better? 50K because less profit goal to trailing drawdown? For me personally, I like bigger. Bigger is better, because one is in terms of withdrawal, you have a bigger withdrawal, but also allows me to either size in, and also if I do like mess up, I have that threshold, or I have that buffer to allow me to make a few mistakes. How about you, Kevin?
Now, for me, it simply depends. There are prop firms that do not have monthly limits. To the best of my knowledge, Top Step does not have a monthly limit. They have a percentage limit. So correct me if I'm wrong, Eula, as far as Top Step is concerned. Theirs is more of a, once you have a funded account, they want to see 5 profitable trading days over $200 total. Then you can withdraw up to 50% of your net profit.
That's correct. And that actually goes to our next page. And some of this information is not exactly correct, as it is outdated. But like you mentioned at the very bottom, Top Step is 50% profit.
Yep. So what that's saying is that you just got to be profitable. You in five profitable trading days, you can pull out 50%, whatever it may be. That account, guys, that account literally could be, once you get to a funded, they don't limit you so much on the top side. They limit you on the downside. They'll stop you out at the end of the day, whatever the threshold is for that specific account. But the top side, you could have $20,000 in that account after trading 5 days. You'll be able to take out 10K. That is different from Apex. Apex allows a maximum withdrawal per month based on the size of the account. You know, a 50K account, 100K, 250K. Top Step's different in that regard.
All right, Joel asks, for Apex, is it better to trade smaller accounts, 50, 100K compared to a 250K? The trailing drawdown gets to me, especially when you're trying to pass the account. So for this one, okay, so when it comes to evaluation account, people, for some reason, even myself included, or I guess I should say we try to pass the account as soon as possible, which doesn't make sense because you're paying for the evaluation, which is 30 days. Why not take the time to pass it? So my I guess my thoughts on this is I hate the smaller accounts because I feel like I can pass them too easily. Then by the time I get funded, if I don't have risk management, I upload them again. So that's just extra costs that I'm going to be forking over, and the platforms are going to be making money off of the activation fees and that's much more. So for me, I definitely recommend starting off having a bigger account, but also take the time to be comfortable with their trading style. Also, how to go into entries. Don't be in a rush to try to complete the 250 or 300K in like 1 or 2 days or in a week. Pick 20 trading days, and if you can do it within that 30-day subscription, perfect. If you take more than 30 days, who cares? It's only like an extra, what, $40 or $50. It's not going to be make breaking. So just take your time, and that's my advice.
Yeah, and you're going to blow accounts, okay? I don't know if Ulaw has actually numbered the amount of accounts he's blown, but look, if you take this seriously, you're going to blow plenty of accounts. It's just part of the game, okay? Don't get discouraged. Look, you may have a bad day and you just went on tilt that one day. Guess what? It only cost you $50. It didn't cost you $7,000. You understand? So you got to be patient. You don't have to do it in one day. You don't have to do it in two. I mean, you can be patient in this. There are some prop firms where, you know, the profit target, you know, for example, Top Step, 50K account. That profit target is easily, I won't say easily, is definitely attainable in 2 days. For sure, because I do it over and over again. It's definitely attainable in 2 days. What's that?
I was going to say, on top of Top Step, this is me personally, I do not recommend getting 50K accounts for Top Step. The reason why is because when it comes to Top Steps, they actually do end of the day drawdown. So your end of the day drawdown also has a day loss limit. So for 50K, I think you can only lose what, 2,000? Is it 2,000 or 1,000? I think it's 2,000, right?
The 50K account, great question. 50K account is 1,000 per day.
Yeah.
And 2,000 total. So, you know, if you have a bad trading day, it's going to blow that. It's not going to blow the account. It'll stop you out. It's a hard stop. The system will automatically stop you out, and you either have to wait the next day, or you start a new trading combine is what they call it. If you want a fresh start that same day. So they do have hard stops every day at that threshold, even for funded accounts. They have hard stops, if I'm not mistaken, at all levels, different size, correct?
They do. That is correct.
Yeah.
And yeah, it's been a while since I traded a 50K Top Step account because I upgraded all of them to 150K. But the main reason why I don't recommend 50K is because once you go transition from the evaluation to funded, they have a thing called a scaling plan. So for 50K accounts, they only require you, they limit you to only trade 1 to 2 lots per position. While when it comes to like the 100K to 150K, they allow you to trade 2 to 3 lots per position. But that's not the main reason why I don't like the 50K accounts. It's because this won't be applicable to people that actually get Top Step X. But if you were to get Trader Rate and Rhythmic through Top Step, when it comes to scaling plan, you can only trade. My recommendation is minis because they basically force you to trade minis because you're not making any money off of micros. But if you have Top Step X, I believe, if I'm not mistaken, they allow you to have that conversion where it's like 10 micros to 1 mini. Where if you go on like TradeAway or Rhythmic, you have that conversion rate ratio at all.
Yeah, honestly, I trade 50K accounts on Top Step. I do. And I trade position size 2ES.
Wait, so I think I heard when it comes to Top Step X, they have that conversion ratio now, or is it
I'm not
still the
sure.
same?
I'm not sure. I do use Top Step X. Okay, and Top Step X is Top Step's internal, charting and order system. Okay, rather than using NinjaTrader or TradeAway, that's their own thing, and it runs on the TradingView platform.
Yeah, see.
But again, guys, it's personal preference. I mean, we're all different people here. We're all different traders. We all have a different set of emotions and sometimes lack of control of emotions. It just simply, you're going to find your sweet spot and what works for you. It's not going to be day one. It's not going to be day 10. It's going to craft itself over time. And you're going to be like, this type of account with this type of prop firm suits me and what I like to do.
Mm-hmm. All right, let's go ahead and finish this last slide so we can take more questions. Let's go over consistency. So this is for prop firms that use consistency in terms of payout. So you'll see like prop firms, they require 40% consistency, or Apex is like, I think 30% consistency. So what they do is they take your highest P&L of that 10-day trading period, or I guess 10 plus trading day period. Then you divide that you divide that over the total balance, and that's how you get your percentage consistency. So if you look at this slide right here, that's how they calculate the consistency, basically taking the highest P&L of that one trading day and dividing the overall balance.
It's now 40%, I believe now, ULA.
Okay.
Apex is now 40%, I believe.
Yeah, I don't really worry about consistency too much, though I don't really pay attention to it. But if you're just trading normally every single day and you're not really doing like big swings or like sizing in too much on one day and you're like reducing the amount of size the next following days, consistency is not something you really have to worry about.
That's right. Where it's going, you're going to get variation, guys, obviously, on how much the market moves that day. Today, I mean, come on. Having 2 contracts and just on short and then go take a 5-hour nap, you would have had a huge gain today. Okay. So there'll be days like that. But what they don't want to see is, and the reason they do the consistency thing is, they don't want to see you going 10 contracts today and then 2 tomorrow and then 3 the next day. They want to see some consistency and not those big outlier days. They don't want to see the outliers. They want to see the outliers like, and you're still positioned correctly, of course, but they don't want to see the outliers of, oh, well, you went 15 lots today. No wonder you made $27,000 instead of your normal 2. Okay. So that's what they don't want to see. And that consistency just goes back to what we were saying, keeping consistent position sizes.
All right, in chat, I know Arcadia mentioned if you're not profitable with trading, I don't think prop firms are for you yet. It really depends on how you approach this. If you can control yourself and just buy one account at a time and do the evaluation and take your time, I think prop firms are worth it. But if you just go in like, I guess, buying like 5 to 10 accounts at a time and you're just blowing them by group trading, then yes, I totally agree with you. It's not for you because the amount of money you're spending on buying those new accounts is no different from blowing your own cash funded account.
Yep. Yeah. Just start out with one, guys. If you've never done this, cut your teeth on one. You're going to get used to the platform. You're going to get used to the trading tools that you may have to adapt to, like, for example, NinjaTrader, if you've never used it. Just do one. If you want to expand further later, that's fine, but just get started with one, just so you can spend $40 or $50 or $100, whatever it may be, just cutting your teeth and getting used to that trading experience with that specific broker or prop firm, I should say.
Right, any other questions? I think we went through the whole list of questions.
Any questions, guys? Okay, before we do, let's see here. If you get down to payoff, Jay, if you get denied a payout for consistency rule, you can just trade more to bring it down. So these prop firms, they're calculating the consistency. This is all done, this is done mathematically, with algorithms. So when you become available for payout, they'll show you when you're available for payout. So you don't have to guess, if it's 30% or 40% threshold. Their systems will automatically calculate it. Otherwise, they wouldn't be in business. So they'll let you know your exact numbers, meaning, your largest day was 10,000, but you're only at 15,000 total. So that, for example, would be not meeting their consistency rule. So, but they'll let you know in each individual account how you stand in regards to their specific criteria. It won't be a guessing game.
And also, if we do get denied a payout, don't worry about it too much. Just train there 10 days and you'll bring that consistency down and you'll also get approved.
Yeah. Yep. They want to pay you. They just want to see that you're legit.
All right. So, the next one is I'm trying to start with one. Something bend the mindset. I see everyone else multiple. That's what's confusing. Why do you want more? The reason why is because there's a reason why greed is one of the sins. We as humans are fucking greedy. I'm greedy too. So of course, if you look at into the future, if I can get $2,000 for a payout for one account, if I have 20 accounts, that's $40,000 within a payout window. Why not more? But at the same time, if you don't have that foundation, you're just going to end up wasting more money on new evaluations and new activations.
Yep. I mean, guys, the first step is doing one account and getting one account funded. That's the first step. If you start one account and you blow it, open up one more. Okay, or reset. Reset is just keeping the account and they'll reset it back to the original metrics. So most prop firms have a reset function. Sometimes it's cheaper than a new account. Sometimes it's not. It just depends on the promotions. But the reset is available pretty much on all prop firms, if not the vast majority.
Yes, this meeting is recorded.
Yep, this is recorded. Let's see here. Jeremy was saying he's had friends that love it, and some love it, some hate it.
So to that, this is where it comes down to your own trading style. I mean, there are some advantages, disadvantages that we covered earlier in terms of having your own cash account. And some people don't want to invest that much capital and just go the prop firm route. It really comes down to exactly what type of trader you are and what's your risk management and risk tolerance.
Yep, absolutely. Absolutely.
Yeah, because if you do have your own cash account, it's essentially end of day drawdown because you don't have to worry about any type of drawdown at all. You just basically buy at a price. If it goes up, you make money. If it goes down, then you lose money.
Okay. O asked, is it smarter to just pay the $35 reset or cancel account and start fresh? Depends. It depends on the promotions that are being ran. So, for example, Apex was running a promotion like a month ago, maybe a little bit longer ago, where new accounts were like $17. Okay. So in that instance, clearly the new account would have been better. Now the new account's 40, resets 35. You can do the reset. But just know that if you take the same account and reset it over and over again, eventually you're going to hit the monthly maintenance charge, which in this case currently it's $40. So that may get tacked onto it additionally. But that's all in your Apex account. It'll tell you when the monthly is set to recharge.
Yep, that's right. And it varies from platform to platform. Sometimes it's cheaper to buy a new account. Sometimes it's just cheaper to reset. I know for Top Step, it's the same price, so you won't have to worry about Top Step resets at all.
Yep.
For Take Profit Trader, it's actually cheaper to do the reset because it only costs you $100 if you have the 150K.
Yep. Yep. Okay, guys, any more questions? Also, before we do leave, please, if you do enjoy this content, you do appreciate what we do, both Eula and myself, we do in both of our profiles have affiliate links. If you guys choose to go down this road of prop firms and stuff like that, just go to our profile, support either one of us. It's your choice and or both or whatever. And we would greatly appreciate you utilizing those affiliate links because that, we do make a little bit of money there for the work that we do.
So I want to ask, where are your profiles? If we click on our icons or our name, it'll bring up like some type of user profile, and it'll be inside that.
Yeah, on Discord.
All right, and that person is, are we going to have more classes later? Yes. So we're going to have it the next 2 Wednesdays. So the next session will be talking about the trading platform and also our trading strategies. And the third trading session will be about risk management, tolerance, and psychology.
Awesome. We did pretty good in 90 minutes, so not too bad.
And not bad at all. No, thank you for joining, everyone. It was a pleasure.
Yes, guys, thank you so very much. I will have my DMs open here this evening for a little bit, but if not, if you have questions for myself or for Eula, just shoot me a DM and ask your questions. I'll get back to you as soon as I can. If not tonight, then I'll should be able to get back to you tomorrow on questions.
Have a great night, guys.
Thank you, guys.